The fundamentals of stocks. Are there any fundamentals in crypto? How to decide if you should sell or HODL your cryptocurrencies, updated June 2020, rewritten the article for a better flow and to include updated examples on crypto fundamentals. Photo by Pierre, Châtel-Innocenti, Unsplash. Cryptocurrencies then and now. When I started grasping my head around blockchain and cryptocurrencies in 2017, there was a lot of technical jargon to pick up. I got so excited to learn and share the knowledge I ended up publishing a book, wrote over 100 articles, and even learned technical analysis along the way. One of the most common sentiments then, and possibly now, is that cryptocurrencies lack fundamentals. By that, what most people mean is that crypto is unlike stocks, properties, and commodities. There is no underlying assets to back crypto. There is no robust valuation method. It is mostly speculative. Cryptocurrencies are priced by supply and demand. It has been 3 years since, and we now have the luxury of looking back on hindsight. By examining the cryptocurrencies that have survived the longest bear market, in its short 10-year history, we can spot certain trends, and these patterns suggest that there might in fact be some fundamentals behind cryptocurrencies. At the very least, understanding some of these factors, or I might prefer to call principles, would help you to decide which cryptocurrencies to HODL in the long run. What are crypto fundamentals? The term fundamentals literal means a foundation, a basis, from which you use to understand something. The fundamentals of learning is attention, processing, application, and memory. Through this cognitive sequence, you pick up different skills and knowledge. The fundamentals of sports are your fitness, motor skills, ball control, field vision, and experience, from which you develop your expertise. The fundamentals of stocks relate to a company's assets and liabilities, its cash flow, its performance and expectations, its industry and competition. Therein, you use these factors to assess the value of stocks, which also influences the frameworks of value and growth investing. When it comes to the fundamentals of cryptocurrencies, we are inadvertently trying to value them as we would traditional assets. It may not be the best method, but given the lack of test and proven models, this would be a logical manner to assess each crypto. The tech, what does it offer that is significantly better than traditional technologies? How do decentralization and distribution make it better? The progress, what are the ongoing developments, get push us, and are the team meeting their deadlines? The people, who is in the team, who are the strategic partners and the community, and how widely adopted is the cryptocurrency? The competition, what other cryptocurrencies tackle the same problem or same space, and how does one fare better than the other? Ethereum, for example, Ethereum, has long proven to work well as an ERC20 platform that allows crypto tokens to be built upon. It has sound technology, good adoption, and steady progress. ETH is still considered an altcoin, but it is the biggest in terms of market cap and functionality. Even then, a key determiner of ETH's value will be its transition towards the proof-of-stake (POS) model. Sharders, likewise, when assessing 4 new cryptocurrencies to invest in, it will be useful to look at some of these factors to determine its potential. For example, when looking at Sharders' tokens, it's not just about understanding and appreciating its utility in decentralized file storage and authentication. To investigate further, I will want to look at other signs like its growing user base on Cygnus, as well as the success of its upcoming implementation on the Island platform. Would companies and other cryptocurrencies integrate the Sharders blockchain, and would users take up their nodes to start mining the coins? TLDR, you do not just buy into a cryptocurrency and leave it there. You should be tracking its progress periodically. As an early adopter or supporter, you get first dips in buying at a cheaper rate, but the discount has also priced in certain levels of risks, and it's up to ourselves to do the due diligence and monitoring to reduce the risks. A better taxonomy for cryptocurrencies, a simple classification to help make sense of the gazillion coins. Medium.com Bitcoin, BTC, fundamentals. As BTC crosses beyond its 10th year mark, it becomes especially interesting because it has managed to retain most of its market dominance the whole time. This has huge significance for trading and buying into altcoins. For example, prices of the entire crypto market move in sync with BTC most of the time, and altcoin prices tend to mirror after Bitcoin's price movement with a slight delay. What can we learn from that? Altcoin season. After most investors buy their first cryptocurrency, usually BTC or ETH, the next step would be to diversify into altcoins. When that happens, altcoins as a whole appreciate relative to Bitcoin. That is not to say that BTC prices will drop, it just means that altcoins will rise more than Bitcoin. One of the precursors is that BTC prices have to be stable in order for altcoins to appreciate. Imagine if BTC prices were fluctuating more than 20% on a daily basis, it is unlikely that investors would want to jump into altcoins given the unhealthy state of crypto. bottom of the bear market, while BTC at $3,000 presented a loss of over 80% in value since its all-time high. Altcoins were mostly trading at a loss of over 95% of its all-time high prices. To put it bluntly, there was not much room lower for altcoins to go, besides zero. During that period, major movements of BTC price affected the prices of altcoins, but for most days, it was just BTC price fluctuating with a relatively flat chart on the alts. Accessibility of altcoins in the 2017 bull run. Most altcoins were not directly accessible via fiat. You probably have to buy BTC or ETH first, transfer it to a crypto exchange like Binance, trade up to and fro altcoins. Today, that has changed significantly and you can trade major altcoins directly with your fiat currency. So if the altcoin season happens, you can expect it to happen a lot faster and bigger because people will not just be changing their BTC for their alts, the FOMO fiat money will flow straight into the alts. What can you do with all this information? Photo by Châtel-Innocenti, Unsplash. If you insist that crypto lacks fundamentals, you should check out the stock markets. Companies are getting struck by a lack of consumption because of the pandemic, but stock prices are still flying high. There's also no right way to calculate your price-earning ratios now when earnings are near zero. But if you should decide to buy cryptocurrencies, whether as a speculation, as an investment, or as a hedge, here are some phenomena that I've observed. Crypto is still heavily manipulated, yes, most markets are. But if you attempt to day trade, you should watch out for the huge spikes that take out your stop-loss orders. And if you are in it for the long run, don't let short-term fluctuations get to you. Most people don't know or understand crypto literacy level has picked up, but most people are still clueless about it. What ledger, what consensus, what immutable? You can expect a lot of blind money following the blind in the crypto market, so be wary of the news and rumors, and be wary of trends in the market. People still believe in HODL. Most weak hands have been taken out, or are no longer in the game. As for the crypto hopefuls, they will either HODL or they might take profit along the way but still retain a portion of their holdings. This is positive news for crypto prices in the long run. Altcoin investing is effortful. You stand to make the most from investing in altcoins, but it's also the most effortful. Whether it's doing your due diligence, keeping track of the altcoin's developments, or trimming your portfolio from time to time, these are essential steps to be successful, so you should be prepared to put in the work, or be prepared to take losses. The trick about investing, much easier said than executed, is learning to minimize your risk and to maximize your upside potential. There are many things you can do to minimize your risk. Dollar cost average, invest in a variety of coins, invest only in what you've researched, prepare to be wrong and cut losses. But to maximize your upside potential, you have to learn to take profit. Most people love to hold the coins because they believe this is the future and prices can only go higher. $100,000 BTC, woohoo. What they fail to realize is that taking profits, or rebalancing your portfolio, along the way is part of the strategy to reduce your risk of exposure. While I used to be and still am a proponent of cryptocurrencies, I would probably emphasize on the importance of picking up good investment habits if you want to succeed in crypto investing.